We have a pretty good program lined up for you. I've got John Santora, the CEO of WeWork, with me today, and he is the head of the most famous co-working company in the world. It was infamously started by Adam Neumann, and then it blew up. You know, there have been books and TV shows about it, and John's been there picking up the pieces and growing the company, and we'll get into that tonight. And, you know, in many ways, as I've told John this, you know, he's the anti-Adam Neumann. You know, he's not about kombucha taps and walking around the city barefoot. He's from Staten Island, and he has a mustache. He's a family guy. Very different.
Yeah.
So we're going to go through, you know, the whole trajectory of WeWork and John's involvement in it and how he got involved. He was at Cushman Wakefield for 47 years before that. Started in the mailroom, worked his way up to the head of the tri-state region. So it was almost 5 decades at his job before he took a new one. So, you know, keep that in mind if you've been in your job for a while. You know, it's never too late to make a change. So I'm happy to have him here tonight, and welcome, John.
Stuart, thank you. Happy to be here. Thanks, everybody, for coming tonight. And just one correction, I started out in the engine room, not in the mailroom.
Engine room, okay. It was probably a couple floors down.
Yeah, absolutely.
All right, well, John, I want to start at the beginning, you know, what you walked into. So give us a little recap, you know, as far as you know, on the history of WeWork. It was founded by Adam Neumann, whose previous company was selling knee pads for babies. And, you know, did you watch the TV show? What did you know about it, like in the early days and all that?
So I obviously from Cushman Wakefield, we did some work with WeWork, you know, from some brokerage work around the world, did a number of deals with and for them. So we were intimately familiar. From a operations standpoint, it was, you know, it was always a question of, is there, you know, can we really fill up all this space? Can they take all this space and use it? So that was kind of the outside looking in. So yeah.
Were you actively doing deals with them when you were at Cushman, or?
I was not, because I was in the management role, and
right.
I was the COO at the time that WeWork was really on the upward swing, and, you know, taking space all around the world. And there was an issue with getting paid on our commissions at one point. Had a tough discussion with a few people at WeWork. But ultimately, so looking at it from the outside was interesting.
So at the same time, this company is growing, kind of exploding all over the world. It became the biggest tenant in New York at one point, you know, at its height. So you're kind of seeing that from the outside. And, you know, meanwhile, you're at Cushman. You started in the engine room, as you corrected me. Kind of give us a trajectory of your whole career during that 47 years.
I will, but let me just kind of finish that other one up. When they became the biggest tenant in New York City, I think the entire real estate industry just took a deep breath and said, uh-oh.
Yeah.
Like, how does this happen when they were larger than J.P. Morgan at that point?
And this, at its height, it was 700 locations, something like that?
It was 7 million square feet in that range.
Yeah.
In Manhattan alone.
Yeah.
So, anyway.
And in retrospect, just to give a little context there, I mean, looking back, it might have been a sign of weakness in the office market at the time that, you know, you were basically having landlords that couldn't fill space otherwise, putting WeWorks there instead, conceivably.
Right. More than happy to lease it.
Yeah, exactly. They're taking on the long-term responsibility.
Absolutely.
You know, right.
So from my perspective, you know, 47 years with Cushman Wakefield, started out, as I said, in an engine room. It was a summer job that I kept for 47 years. I actually wanted to be a fireman. My whole family were firefighters. My father was a battalion chief when he retired, my brother a captain. And, you know, as I came out of school, it was 1977. Half this room was not born yet. And New York City was going bankrupt. And for the first time, and I think only time in its history, it was cops and firemen and sanitation men were all getting laid off, and it was really tough times. And so I knew at that point, even if I wanted to be a fireman, it was going to be a long time before I could get into that role. So I stayed in that summer job, and from there, ultimately moved up into management of properties, and from there, kind of started managing the company over years and going global.
So that was when you first got started there. That was the time, right, when it was Ford to City, drop dead. That was the famous New York Post headline. What was it like working even in brokerage at the time? You know, I mean, you were working in the engineering room, but was it like you were putting out fires literally. Yeah, I mean, the city was pretty rough back then.
Yeah, it really was. It was very different when you came into work, and being an engineer at the time, it had the early shift, and coming in the subways were tough. Just the streets back then, and the hookers in the streets and drugs and all that. Bryant Park, which is gorgeous today, right, was Needle Park.
Right.
But I'm dating myself with all of this.
Well, and the Upper West Side was the panic in Needle Park.
Exactly.
If you ever want to watch a good movie about the 1970s New York that's really scary.
Was it New York is Burning? Or?
Yeah. The Bronx is burning.
Bronx is burning.
Yeah. So then you made a transition to management at some point.
Yeah.
And what were some of the notable things you did while we were at Cushman? The World Trade Center deal was one of the highlights.
Yeah, that's definitely one of my highlights, and it's probably number one on my list. Being part of the team as we, along with J.P. Morgan's, positioned the World Trade Center to be sold to an investor landlord from the Port Authority. And we spent about a year and a half actually pulling all the documentation together, understanding all the systems and so forth. And we had to build a budget of what a traditional landlord would actually spend. So,
right.
One of the things I go back to is they had 250 managers. Every time I met, or one of my team met with, let's talk about the electrical systems. A room about this side of electrical engineers would walk in and go like, what do you all do?
Yeah.
And it just repeated itself. So we,
And so this was the deal when they were selling it off to Larry Silverstein, or this was an earlier deal?
Yeah, so we positioned it for sale. We had a number of bidders, went through that process, and obviously sold it to Larry,
right,
who had it for 6.5 weeks.
Wow.
Which is,
and then, I mean, it must have been especially impactful, this happening. I mean, it's impactful for everybody, but I mean, you were in the guts of the building.
Well, so all those people for a year and a half that I worked with, right?
Yeah.
Now in that, so I haven't told much, but I grabbed Arthur Moranti called me, and I was on a conference call. Arthur was our CEO then, and he said, "A plane just hit the trade center. Call Larry, see if you can help." Now he's thinking like a private plane at the trade center, which has happened before. So obviously I can't get anybody from Larry's office on the phone. So we then saw what happened. So 10 or 12 of us jumped on a subway to go down to help. And, we were in that subway thinking like, all right, how do we rebuild this and all that? Like all those conversations are going on. And when we came out, the first tower had fallen.
Wow, geez. And this time you're head of the tri-state region for Cushman, and
I was the head of global property and facilities management and construction management.
Wow. So then you're involved in all the rebuilding and all that stuff later.
Yeah.
Wow.
Yes, we as C&W lost 17 million square feet of what we managed at the time.
Wow.
When you think of all the buildings around it.
Wow. So we just went through the 70s, which was a tough time for the city.
It'd be a long time to get to 2025, right?
So now we're fast forwarding past that into, 2019. And this is, a period in New York before COVID. We saw some run up in the property market in some ways. And there's this company, WeWork, that you're sometimes not getting paid by, I guess. And 2019, they buy a private jet for Adam Neumann. They lose $2 billion that year or the year before. And then in 2019, they try to go public. And what happens?
Yeah, look, from my perspective, I'm not even watching that at that point, right? There's other things going on in our business, and it wasn't an important part of what C&W was doing at the time. But obviously, it went through, was going to go public, had a valuation of 40 some odd $40 billion, and that failed, and they ultimately did go out, and it's all history.
Right.
Most people have seen the documentaries or the movies. I've watched a little piece. Here and there.
Yeah, I think it was at $40 billion, and it went down to $10 billion. And, we always covered WeWork a lot here.
Yes, yeah.
Adam hated us covering it because he thought of himself as a tech company. So whenever we called saying we're calling from a real estate publication, he would get really mad because it reminded him that was actually a brick and mortar business, not some, Silicon Valley startup. And, at the time, and I want to get into the, current financial performances,
Sure.
which is a lot better, but we'd also have fights with him over something he would call community adjusted EBITDA, which is basically EBITDA, but adjusted according to the perception of the community, how they felt about the company or something like that didn't make a whole lot of sense.
I have no idea what that was.
Yeah, exactly.
Although somebody did ask me after one of my presentations about the EBITDA you talked about, was that community adjusted? And I said, I have no idea what you're
I don't know what that is. So fast forward, the IPO didn't work. I think Adam walked away with $1.7 billion. They didn't go public then, but they went public 2 years later. They're still way out over their skis. They go bankrupt. Yardi, which is a property management firm or tech firm, buys them. And Cushman had made a little bit of an investment in WeWork like 6 months prior, something like that. But, the owner of Yardi puts in a call to John and says, "Hey, are you interested in this? Were you surprised? Where did that come from?"
I'll give you the kind of scenario there when Elliott Yardi acquired the majority share of WeWork. I know Elliott for, call it 35 years. It's a property accounting software that he has, and he's the best in the world with it. So I picked up the phone as a representative of Cushman Wakefield, and I said, Elliott, you just bought a real estate company.
Yeah.
Let's talk about how we can help, meaning Cushman Wakefield. So we got together, we met a couple of people from Cushman Wakefield and myself, and then 3 days later he called me and he said, you really want to help? And I said, yeah, I want to help. So he said, why don't you come in and run the place for me? And I kind of took a step back after 47 years, and I said, I don't think Cushman Wakefield is going to let me do that. I don't know how they would. Yeah. So
you'd be very busy.
So we talked about it, and then when I made the decision, I actually called. I spoke to Arthur Moranti and Bruce Mosler, both as two of my mentors, and I said, got this opportunity, and Arthur said, you got to do it.
Yeah.
He said, you're the person for it, and whether I am or not, I then spoke to my wife and my two kids about it.
Yeah.
And we made the decision to do it.
And your wife was a fan?
Yeah, yes and no. She kind of got used to me spending a little more time at home. Yeah. My daughter had a great line. She looked at me and she said, look, Dad, we love you. You're a great, you're a vacation dad. When you got too much time on your hands, you're a pain in the ass.
Yeah. It cuts both ways. Yeah. I mean, I'm the kind of guy who will listen to my wife. Sam, seems like you are too. Yeah. So, you got to take that under advisement. Yep. And I'm sure the payday was good too. I'm sure there's some good incentives there. So you came on board. What were the relics of WeWork? What was the first order of business that you had to take care of? What did you, was it shutting down the free beer taps? What did you have to take a look at?
So as I entered, it was the day that we exited bankruptcy. And look, going into it, I had this concern that the people that were at WeWork were people that couldn't find a job elsewhere at the same salary and everything else. So I was really pleasantly surprised with the team that was in place. I mean, they are all top professionals. They're there because they love the company and they love what we do and how we do it. They had gone through, I'll be honest with you, they went through hell through that process, renegotiating leases all around the world, but trying to, dealing with landlords where we giving back spaces and, not easy.
Yeah.
Right. And then they did a marvelous job of, if we were walking out of a space, if we were leaving a space, to transition those members from one location to another location. Today, as I talk to these firms, our members, and they will tell me that, is that your people handled us with kid gloves. And in some cases, Peter Greenspan and the leasing team actually helped the members negotiate a lease directly with the landlord. So it was an incredible group of top professionals, and we couldn't have accomplished what we have without their help and their dedication. So I'm really proud of the team that we have.
And there was something like 500 locations, and you ended up backing out of 150 or something like that?
It was about a third of the portfolio was renegotiated. And here in the States, with bankruptcy laws, you could leave, you could walk away from your leases, and the rest of the world, bankruptcy is not as easy.
Right.
So we still had and when I got there, we still had about 30 deals that had to get closed, mostly outside the United States. A couple here where, bank properties were going back to lenders and so forth. But, one of the things we've talked about is, yes, we went through a bankruptcy, we had to renegotiate leases and everything else. And I remind our team that you're sitting across from a landlord who somewhere in his or her life has gone back to the bank and said, here's the keys, right? So don't feel bad about what's happened, how it's all about how do you move forward? What's your next step? How do we, put this behind us and become successful?
Yeah, I mean, pretty much every landlord's gone through something similar to that.
The biggest in the world have done it, and we know them all, right?
What was the tough thing about other countries in working through the process?
It's just that much more difficult because it's not, the laws are different, the structures are different, how we held the buildings were different. You couldn't, if the building wasn't held by itself in its own LLC, and they could go back to, the other buildings and look at all the profit or revenue that may be coming from those buildings. So again, the team handled that really well, and we're pretty much wrapped up around the world on all that.
Yeah. Well, it seems like obviously they were sending a clear message in hiring you. They wanted, an adult at the helm, and everybody who's worked at different businesses, it's like, when you have a manager running your department, are they an adult or are they not an adult, right? I mean, that's the distinguishing factor in management, in my opinion. But, so that's a clear message. What's the vibe you're aiming for with WeWork these days? It's not Adam Neumann, Flair, it's not Regis, because Regis and those companies are kind of more boring. Like it's somewhere in the middle, right?
It absolutely is. So first of all, from a company perspective, it's about discipline, structure. Our investments are really worked through. Every deal we make has to be profitable. We have, anytime there's a deal over a certain size of a member coming in, we have a team that goes through an analysis and says, yes, no, can we restructure it? So it's really, that's the important thing, right? So, and I've said more than once to our team early on, we have $2.x billion of revenue. We need to make a profit. If you've got $2 billion in revenue, there's got to be a way to make a profit. So we've gone through the tough things of restructuring our staffs, right? Our employees and expense base matches the new portfolio we have today. And so we have turned that corner. The last 2 quarters have been EBITDA profitable, traditional GAAP EBITDA profitable.
Right. No footnotes there.
But we are spending significant dollars to reinvest in our property. So we're spending $80 to $100 million this year. We think that's pretty much what we need to spend every year to keep our locations at the very best. We keep our technology up to speed, our space is clean, great, creative, and so forth.
Yeah. And aesthetically, is it the same? I know it's a more intangible question, but is the style the same? Is the marketing the same? Is the branding the same?
I guess three questions in one there, right? So the aesthetics, the feel of the WeWork locations that you walk into, it depends. We have some locations that have been around since 2016, and we're upgrading them now. We're refreshing them now, but we have some that have been recently done. And I go to Central Plaza in Dublin, which I was in, I'm going to say about 4 months ago, and it looks like any corporate headquarters in the world with, the dark gray marble. You walk into a boardroom and you've got the wood paneling all around. It's just spectacular.
So it's not all just going to be, and we talked about this a little bit, not all Midtown, South, Loft. You want to diversify a little bit more upscale. You were saying you're going to look for maybe not, the trophy tower, but a trophy type, a little bit more of that type of space.
Yeah, if I look around the world, so Central Plaza, if you go to London, we have a building, 10 York Road, which we have the entire building. Again, spectacular views. The build-outs are great, really high-end build-outs, and the place is packed. And then you have Salesforce Tower in San Francisco, which we have, and we're on 36, 7, and 8. So fabulous views in the best building in San Francisco. So those are important parts of our kind of DNA, but future as well. Right. We need to have that statement that we can service from that little entrepreneur all the way up to the biggest companies in the world. And last night we had a little client function, and 3 of the biggest banks in the world were represented there, and 4 of the largest technology companies, and a few of the farmers were there. So that's the type of clientele we have. So we need to be able to service them all, have that cool space that's been around for a while, and then have that corporate space.
And the old WeWork, would never have done Salesforce Tower in San Francisco. That wouldn't have been part of the...
Well, they actually did, but, it was
but more of that. So
they had hot tubs, and then they have hot tubs in the spa. Peter's shaking his head.
Yeah, that's extra. Talk about the different lines of business, because it's not just the traditional, individual blogger and three-person fashion startup. You're getting deals now with Amazon. You just did a 300,000 square foot deal with Amazon on 34th Street. One broker was calling it the canary in the Class B coal mine as far as Class B deals, and that market heating up. So that's also a different line of business. You want to talk about that?
Yeah, so that's our enterprise business. So the Amazons of the world and a number of our other clients are looking for big blocks of space, but they want to take it on a short-term basis, and we can provide that. So 330 West 34th Street for Amazon, 300,000 square feet, maybe a little bit more. We back that up with 115,000 over at 5 Manhattan West. So, 2 very different types of buildings. So we've done that, a few buildings here for Amazon and a few buildings around the country and around the world. We've also done that with other clients, and others. So right now we've got a couple where we're actually building. They're looking for a 30 or 40,000 square foot headquarters. We'll put the capital up, we'll take down the lease, and we'll provide them all the services.
Right.
And they don't want to, their CFOs struggle, especially now with all the turmoil that's going on in the world. Do they lay that capital out for real estate? It is sunk capital. They can't use it for research. They can't use it for investment in their technology. They can't use for whatever their business is. That money is sunk for the term of the lease.
Right.
So by us putting up the capital, it's a lot easier getting that deal past the CFO.
Yeah, it's funny because you think, the question is, why wouldn't Amazon just do the deal themselves? But you're essentially, evading their internal red tape processes by doing it for them as part of the attraction. Well,
yeah, it's the difference is, so if Amazon or any of those corporate clients are negotiating the deal, it's a lease that has the attorneys protecting that big company, right, and everything that they do. And then you've got the landlord's attorney, and it's all about liabilities and all kinds of protections. Our structure with Amazon and the other corporates, and I don't want to keep mentioning Amazon, but with all those corporates is a membership agreement. It's a 4-page agreement. Right. We do the deal. We do the lease with the landlord. And our requirements and our speed is a lot different, right? Because our people, that's what they do. That's what our attorneys do. They're not protecting a whole big company, a global company like, Amazon or somebody else.
Right. And the other thing you were saying is, Amazon doesn't want to do the deal directly with the landlord, so the landlord can't be like, well, I just want to do the deal directly with Amazon.
Nope.
They don't want to do it. So
They won't.
yeah,
They will
so that's a big...
find another building. They don't want to do the deal.
And then the other piece of it, which I think is important, is I think you were saying it's your lease with the landlord is coterminus, or the same length as it is with you and Amazon. So you're not getting out over your skis of taking 300,000 square feet and then not being able to fill it.
Yeah, absolutely. That
seems important.
is, that takes the risk off the table.
Right.
So it's an interesting business from that perspective, our business overall. And everybody would say, well, you should never take a lease for 10 years and you get a 2-year tenant and now you're completely at risk. Easy to say, right? But there has to be some risk in a business to get a reward. So we balance that out now. We have maybe 100 or 120 management or rev share agreements. And then we have our leasing deals. Some of them are coterminus and some of them are, we're completely at risk. But I will tell you the analysis, because we're taking 2 new leases, and the analysis that goes on, we know the risk we're taking and how limited it is when you control the amount of space you take and when you put it in the right location.
Right. And you're always just balancing your long-term exposure with your leases against your short-term tenancy, right? I mean, that's.
But the team has, 10 years worth of data or even longer. So they know that, 222 Broadway, exactly how many people come into that building every single day and why they're there. So that building's going residential. We know that we can take another lease in that small area because it sits right over the Fulton train station, and we will have those same people come into that space for the new lease.
Yeah, and it seems
so
like
there's no risk from that perspective, limited.
And how about the really short term part of the business? Is that just going to become a smaller and smaller part of the revenue? I confess I was in downtown Los Angeles last summer and I walked into a WeWork there, sat down, started working. I worked for like 3 or 4 hours. Then I decided to pay for it. I didn't pay for it at first. I felt pretty bad about that. Now I feel like I personally, obviously affronted John. I did pay for it eventually. But, it's so porous. You can walk right in there and just start working.
Yeah, it actually... Yes, that happened, but most cases you'll be challenged. There is that all access card. So we have a card that get $350 a month or $400 a month that allows you access in 37 countries and 500 or 600 locations around the world for that. So when you're a traveling executive or you're a small entrepreneur that needs to move around to be with others, it's a perfect way for them to use the space. That's 28% of our revenue, and it's just consistent. Wow. Right?
That completely mobile pass is 28%?
Yeah, well, that and our on-demand.
Got it.
Those little, and the people that take 1 or 2 desks.
Right.
Process.
Yeah. Well, I want to step back and talk just a little bit about some of the broader office market trends that's happening right now, because it does seem like it's starting to be an interesting time for the office market in the city and even nationally. I mean, after 5 years after COVID, it seems like there's really starting to be an uptick in the commercial market. There was before for Class A space and some of the trophy property, but it seems more broad-based now. So what are you seeing, and how does that tie into what WeWork does? Are you benefiting from that?
So I was walking down the aisle over there, and there was a headlines from 22 that said, "Who's crazy enough to own office?" Right. It always goes in cycles, and in my 48 years now in this business, I've seen a whole bunch of those cycles. Yes, it's coming back. It's coming back for a number of reasons, right? One, people are returning to the office, and during this period of time, you think about it, it's 5 years from COVID, almost 6 years now, or from when it started. Leases expired. So a lot of tenants didn't take new leases because people weren't coming to the office. So now as they demand everybody come back to the office, what do they need? They need space. So to fulfill that requirement, some of it's coming to us, right? Because they haven't determined how many people are actually going to come back, how much space do we really need, and then that whole capital expenditure issue. Right. So, I mean, it's easy to make the demand. Everybody's got to be back in the office, but There's a whole bunch
Yeah.
behind that. And some of that is benefiting us without question.
Yeah. And the top story and the real deal today is about tech office leasing. And it's, one report put it at the highest point, most active in 25 years. And all the tech firms are worried about getting enough space for expansion later on because there seems like there's more activity happening there now too.
Yeah, and a lot of that is driven by AI without question. And the firms that are supporting the AI firms.
And you're even seeing that in not just in Silicon Valley. I know you're working with 220 AI firms or something.
Yeah,
like
we
that?
have. That was last count, and that was a few months ago, so it might be more. But 220 AI firms in our spaces around the world, and you see them come together in different events. It's really cool, and you walk down the corridors, the hallways, in some of them, and they're writing on the glass with their formulas, and they're knocking on the wall of the other guy, like, what do you think?
Wow.
It's really cool what goes on. And then we have the biggest in the world are in our spaces.
Yeah.
Without question. And seeing what they're doing, it's just amazing what's happening. And most of us don't think about how much we're actually interacting with AI on a daily basis, right? Everybody thinks about chat.
Yeah.
But there's so many other things that we're interacting with every day.
Right.
And it's only going to get more and more. And so there's that question, right? Does that mean that we're going to need less people? Well, I'll go back. I'll date myself again. When the first laptop came out or the first desktop, we're not going to need people anymore. The computers are going to do everything for us. And what happened, right?
Yeah. So. I mean, it's also a function of how many new things people can think to build, right?
Exactly.
I mean, it could be quantum leaps in productivity, but still you could have a lot of economic activity because there's, I don't know, you're building spaceships to Mars or something.
Right. You need people to physically build this stuff and everything else that goes with it. But
of the 220, how much of those are in Silicon Valley and how much is spread around? I mean, is some of that AI in New York?
There's a lot of it in New York. There's a lot in 222 Broadway and a couple of our other buildings that many of them startups. But I think the first or second month I was here, we did an AI function out of 222 Broadway, and it was just amazing.
Yeah.
Amazing how many people were connected with it, and we had 1,000 people connected, online as well. But yeah, so New York, San Francisco, Singapore, London, it's where the talent is.
Right. And I know you're not leaning as heavily on the communal aspect of WeWork now, or the, kibbutz light aspect of it of before, but like that's still very much a part of it.
It's an important part of what we do. That welcoming as you come in, that community area, the coffee and just the chat that goes on, and the way it's relaxed. But the couches here, like obviously every one of the WeWorks you come in, you see the couches. It's all part of that warm, welcoming feel that goes on. We're actually now, though, we've engaged the Ritz-Carlton to take that up a notch, to train all our community employees around the world so that we get one more notch or two more notches in that welcoming and bringing people in.
That's
it's
cool.
It's the maturing of the company.
It makes sense. So that's all good news about the office market. The flip side, which we've talked a little bit about, is tariffs. And, are you seeing uncertainty there? Is there going to be, a taco scenario is the acronym is starting to be more widely used where, things like, what do you expect is going to happen with office space and uncertainty?
Oh, look, I think the large firms are still looking at if their leases are expiring, they will take new deals. They have to, right? Mm-hmm. But it's that, firm, even a large firm, was looking to expand in a new market, looking at, should I be in Sao Paulo? We were going to do this plan to move into Sao Paulo, but I don't know what the tariffs are going to be. So those are the ones that are coming to us without question.
Right.
Because we can be the easy button. And, and I like that term because it's really easy. And I saw yesterday, the day before, our head of design and construction had her chart as to how quickly people need to respond in the chain. So we respond within 24 hours for a test fit. And I looked at that and I said, there's not a real estate or an architectural firm in the world that's their SLA to respond in 24 hours for a test fit and 3 days for an estimate. It's amazing what we look at. It's about speed. It's about, getting someone in there quickly, not missing that opportunity, and allowing them to make the decisions even late in the chain,
Right.
and still being able to service them.
Yeah, in what is traditionally a pretty slow-moving industry.
I mean, you negotiate a lease, 300,000 square foot lease,
Yeah,
18 months
yeah.
in the traditional world.
And I want to ask, there's commercial brokers in the audience tonight. I guess what's in it for brokers? We were talking a little bit about commission and how you're changing that up a little bit. There's some incentives in different cities.
Yeah. Look, we pay our brokers a pretty good fee. I mean, some of the deals we've done here put some of our brokerage friends to the top of the charts within their companies. But it's 10% for the first year. And then on a renewal, it's like 5% if you renew for the second year. We've given some incentives in some of the markets to get a 2-year deal versus a 1 year and then renegotiate for the second. So we've done some of that. But we will pay it. Actually, if you calculated out the deal, it's more from us if you did a 5-year deal than you would have if you did a 5-year deal with a landlord.
With traditional lease.
Yeah.
Oh, wow. Well, I want to open it. I have some more questions about the market, but I want to open up for questions. Joe?
Hi, Joe. You going to raise your book up? You want to show everybody your book? Yeah. Oh, no, the other Joe. You got it.
So, I have a management background, and I'm always interested in learning and hearing about the turnaround. So you walk in one day, and in the 2 or 3 weeks, you're seeing everyone's happy to see you, but was there part of the management that you felt had to be strengthened right away? There was a little, what did you do?
So, look, there's a couple of things. One is I put a structure in, and the way I work is we have a meeting, and my team that is here might laugh at this, but the first meeting starts at 9 o'clock, right? I used to do them at 8, but I was told, okay, we'll do it at 9. At 9 o'clock, I got up and closed the door. There were only 3 people in that room out of the 10.
Okay.
Right?
So was it like legal that you needed, or was there where was the weak link?
So there was a couple of things we'll talk about. They just went through a bankruptcy, right? So there's a level of being paralyzed from that, because what happens? You got the attorneys on one side, you have the accountants on the other side, and somewhere out there are the shareholders, right? So everything you did, you had to go through this process that took a long time, right? So part of this was, hey, that's done. It's over. We're about speed. We're about being with the members. We're about growing our business now. I went out and I met with every one of our large members, every one of our enterprise clients, and the top 30 or 40 of them. I spoke with them. I met with them. I got on a plane and did that. And some of that was with our leasing team. We did some restructuring. Our chief revenue officer isn't here anymore. I promoted up some of the really top professionals within our organization. So there were some changes, and with those changes sends a message, right? You step up, or maybe you're part of the next cut that comes up. And I'm proud of the people that have stepped up and that are here, right?
Strong leadership.
Absolutely.
Yeah. Other questions? Oh, go ahead.
When you do these big build-outs in larger companies, do you do it with your own capital, or you get banks to finance it?
So we do it. We can do it 2 ways. Some of it we'll take down ourselves, and some of it we will get some outside capital for.
Debt capital?
We get some outside capital for it. Most of that comes from, there's a couple of firms that will do TI and lending, specifically for the TI.
I have another question, unrelated question, is do you feel that companies work more efficiently when the people are at work, or do you think it matters if they work remotely or they actually work in the office? Do you think there's a difference in efficiency, morale of the company? Does the companies are more successful less successful? What is your view on the whole thing?
I think without question, creativity and success and growth and everything comes from people being together. The collaboration that happens, the collisions that happen, and I know those are throwaway words. So I will tell you, I'll go to C&W. We're in the office, and I'm standing by the coffee bar, and one of the young brokers said, I don't get what the whole thing is with interest rates. It's 6%. I said, come here, let me tell you. And he said, that must be the highest ever. I said, first of all, my first mortgage was 18%, so forget about the highest ever. But I said, think about it. So last year or 6 months ago, it was 3%. This is what you paid on $1 million note at 3%. Now it's twice, right? Take that and think about that building over there that has a $100 million mortgage or a $200 million mortgage, right? And then as we're having that discussion, there's a whole bunch of other young brokers that come in and are in there, and we're answering questions back and forth around lending and mortgages and so forth, and what are mezzanine debt and all this. Those kids would never have learned it if they were sitting home, right? Or they were on a Zoom call, because when the Zoom call is over, you hang it up. So this happens, and that's just one example, but we see it every day where we'll run into one another. And, oh, by the way, do you know the guy over at Meta? Yeah, he's a friend of mine. Why? We're doing something with Meta or whoever it might be. That doesn't happen when you have a scheduled meeting on a Zoom or a Teams call and you're working from home.
Yeah, it seems like it's part of the DNA of WeWork for sure. Other questions?
Yes, thank you for being here. You mentioned you came from Cushman and you transitioned to WeWork. Under your reign at WeWork, how do you plan on competing with some of the other PMs, L&L Holdings, maybe TF Cornerstone, even CW, from just taking a floor, 2 or 3 in their Class A buildings and turning them into shared office spaces, cutting you guys out?
Can you speak in the mic a little bit better? You
Yeah.
said,
You're talking
how do I
about-
compete against?
Holdings or even C&W that could just take a floor or 2 in their Class A buildings and to shared office spaces and cut out the middleman.
So it's first of all, it's not a competition, right? Because if they are the leasing agent for the building,
Right.
and we take the space is off their hands, right? We're paying the rent. They don't care. They do, but they don't care whether or not we're making money at it. They've got a tenant for the space, right? But if it's a management agreement where we have an agreement with the landlord to try to lease that space, again, it's not what Cushman Wakefield or JLL or most other firms, with the exception now of CB with Industrious, it's not what they do. So Industrious does, and we know that they're a competitor, but I will tell you that we do lots of work with CB and their brokers without question. It's more for the landlord in a lot of ways. It brings energy to some vacant floors, right? When we do this all access and you go in there, there's all kinds of people coming in, bringing a buzz, seeing the space, deciding they like the building, don't like the building. So it really energizes a building in most cases. But I've never thought of us as a competitor to a property management firm. I could get the idea that we are maybe from a leasing agent perspective at times.
Yeah. Go ahead, Ron.
Three-pronged question, if I could be really greedy here, because this is so interesting. I guess part A is, would you characterize the evolution of WeWork now from a co-working company to more of a flex space type of operation, given the larger blocks of space that you're renting to more significant tenants?
Actually, no, because those big blocks of space are about a third of our business. So that 1 to 10 is also in 30% or 28% of our revenue. So we need, and it's also part of our DNA to be servicing those clients. And sometimes they merge and they become bigger. And then that mid-range, that what we call the SMB, so the small local businesses, the accounting firm or whatever it might be, we're perfect for them, right? And that's a really good part of our business. They don't have to, if you think of that 40-person firm or 30-person firm, right? It's the founder is the president, CEO, head of everything, right? So now if he's going to go out and lease a space, the brokers are going to tend, nothing against the brokers, they're in my heart, going to go out and it's going to show them 20 locations. And then they're going to get down to 10 locations. Now, every time he's out, he's taken away from growing his own business, right? And then, okay, we got the space. Now we got to get the lawyers. Now we got to get the architects. We got to do the construction, put up your money, and you're going to be in it in 6 months or a year. And we say to him, come to us. We give you your own dedicated space. We provide you the IT support. We provide you the community manager to welcome your guests, serve them coffee, and that's all included in the price.
So the value proposition is inherently about speed and turnkey
And cost.
product.
Cost as well.
So part B of the question.
Yep.
How many square feet of of space do you presently have under lease in New York City? If
In New
that's
York
not
City,
classified
it's
information.
just about 3 million, 2.7, something like that. I could ask back there, one of my guys. What do you got, Peter? In that range? Okay.
And last, sorry, I'm being greedy, but it's so interesting. I've always been curious, just in terms of your revenue model, if there's, an inherent, discount to market on your lease rate, where that delta to market is part of built into the revenue model, or is the space that you're leasing, even in these large blocks, at market?
So we will try to get a really good deal, right? We may take a long-term sublease and get a better rate. But in the cases where we're paying market rate in the building, before we make that deal, we go through a whole hell of a lot of analysis to see if we can make money at what we call our ARPM, right? What are we collecting on a cost per square foot? From what's the revenue per square foot? And then what are we paying, and can we make money at it? And I think that is one of the big differences of where we are as a team today than where you may have been in the past, is that analysis is done, and then there's a go or a no-go that happens.
Mm-hmm. Well, I
Thank
think
you so
we're
much.
at time, and I want to thank John, and congratulations on positive EBITDA and not just community-adjusted positive EBITDA. I want to thank you guys for all coming out tonight, and thank you.
Thank you, Stuart. Thank you, everyone.